Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 10th of May 2021. Alright everyone, let's get into it. So it was a very big weekend, right? Very big Friday, Saturday, and Sunday. ETH is over $4,000, and as you can see here, I tweeted out simply today 40%, because ETH is 40% of the way to $10,000, which is, has been my price target for quite a while now. You all know that. Haven't been shy about that, but it's very, very exciting. Almost halfway there. But not only is the USD price exciting, but the ratio is very exciting right now, right? The BTC or the ETH BTC ratio, which is over 0.07 at time of recording. So if it goes another, I think 2x and a bit from here, it flips BTC. Now, I don't know if that's going to happen on this current ETH run. I don't know if it's going to flip back and Bitcoin's going to go on a run for a bit. It certainly feels like ETH wants to go for the flippening, right? The strength in ETH has been amazing, honestly. And Bitcoin's just sat there doing nothing for a while now. And, even DeFi, it feels like the only things going up is ETH and a bunch of scams. Really, or dinosaur projects, as I wrote about on Friday in the newsletter, dinosaur season. DeFi is sitting really flat. I think that because ETH is going up, DeFi doesn't want to move. BTC is just ranging between, 55, 60k or thereabouts. And yeah, ETH just keeps going up, over 4,000, over 0.07 on the ratio. I'm not surprised, obviously. I'm a hyper ETH bull, right? None of this surprises me. But what I am kind of surprised about is how fast it's happened, because it just shows me that so many people were underexposed to ETH, right? Because everyone just piled into Bitcoin for the institutional trade, and everyone was piling into Bitcoin because a lot of people didn't understand ETH, didn't understand, why ETH was going to accrue value in it, and a lot of people still don't. And it's funny because it's the last 2 years we all knew about 1559 and the merge, the ETH1 to ETH2 merge, and then suddenly the price seems to be reacting to that just now, just over the last, I guess you could say, 2 months. Because I believe that, unless ETH is gaining on BTC in the ratio, a lot of its price action is definitely just following BTC up, which it's fine. Obviously, it's good because the USD price is going up, but obviously I think it's much better if ETH is gaining on Bitcoin and being independent of Bitcoin and rising on its own merits. I really like that aspect. But I think a lot of you would have seen this on Twitter. I think this current run is very institutional driven. I think institutions are finally buying ETH. A lot of them aren't going to announce it until they're done buying because they don't want to push the price up further, while they're still buying. But if you kind of look at the action on exchanges, on centralized exchanges, because that's where the new fiat comes in from, especially something like Coinbase, the spot buying volume is insane. It is I don't think it's ever been like this. We're consistently doing more volume than Bitcoin. And even things like Ethereum Classic are going up because people want to buy the cheap ETH. There's just a massive mania around ETH right now. And the funny thing is, it's not just based on kind of belief or pure speculation. It's based on actual fundamental value drivers coming, like 1559 and the merger. The fees on the Ethereum network for layer 1 haven't gone down at all, really. They've actually started going back up. They were cheaper for a while. There was it got down to 30 Gwei, and now it's consistently over 100 again. Now, obviously, that's not good for end users, and obviously, those fees are quite high, and we're still waiting for more kind of generalized layer 2s to go live, which they will soon. But it's just that ETH, right? In 2 months, or just over 2 months, on July 14th, most of that ETH's getting burned, right? This isn't some speculative stuff. This is actual fundamental. We know what's going to happen. And then a few months after that, whether that's the end of this year or early next year, we have the ETH1 to ETH2 merger, which is reducing issuance by 90% or something like that. And reducing massive amounts of sell pressure as well. So from because obviously stakers don't have to sell to cover the high costs like miners do. So from my point of view, not to say that we can't have a dump or we can't have a prolonged down market, we certainly can, and there's certainly a lot of speculation. But if this really is institutional driven, institutions have stronger hands. Not to say that they won't ever sell, but they have stronger hands than retail investors do. And the funding rates or the leverage in the system for ETH has been quite low for quite a while. I think it started ticking up recently, but it was quite low. And then just a lot of people trading their Bitcoin for ETH because they were underexposed. So I think all of that has culminated in the over 4K ETH really, really quickly. It was 2K 6 weeks ago or something. I think probably even less than that. Like last time I checked, I think like and the ratio was like, much less. I mean, it's just crazy how fast the ratio has moved up. But yeah, we are definitely, I think, getting into I mean, I wouldn't say mania territory just yet, but it's feeling like you're in like this belief stage where you're like, holy crap, like this is going up really quickly. I still think obviously ETH's going to 10k and all that good stuff, and short-term movements are always very, very hard to pick. But still, just some kind of like warning there. And I mean, it's not really a warning. It's more like keep your head on, right? If you do have targets of take profits and things like that, stick to them. Don't change them, right? Because if you start changing them, you start moving them up, and then maybe eventually it kind of gets to a point where it doesn't reach your target, and the ETH price goes down, and you FOMO, and then you kind of like panic sell or whatever. This isn't investment advice, but this is just some kind of. I mean, I don't want to encourage people to never sell just because I'm never selling. Like every individual's situation is different. I have the privilege of not having to sell my ETH. That's just the position that I'm in. But if you're sitting on life-changing money right now from ETH, and you're all in on ETH, and you need that money for something. Maybe you want to buy a house or pay off your house, or maybe you want to buy a car, or maybe you want to buy something, whatever it is, right? I mean, I wouldn't discourage you, and no one's going to blame you for taking profits. Like I know plenty of people that are taking profits. So at the end of the day, it's all on your individual situation. Even if you believe ETH is going much higher, de-risking, taking some profits is never a bad thing, and it's definitely healthy for your mental state too. Because if you're all in, you're probably thinking, oh wow, is this going to go? How long is this going to go? Is it going to crash? Oh my god, I have this much money, but then it crashes. You're like, oh, I should have sold, blah, blah, blah. Stick to any plans that you have. Stick to sell targets. Don't move them around. Don't play with fire. Just keep your head on and you'll be okay. But anyway, as I said, not investment advice, but just some little advice there. Because I get this question a lot from people, and I just wanted to clear it up that my position is not your position, and your position is just literally just you. You have to do what's best for you at the end of the day. But keeping on, I guess, like the theme of institutions coming into ETH, VanEck, which is a company in the US, a financial company in the US, has filed for an Ethereum ETF in the US. Now, VanEck has obviously filed for their BTC ETF previously. But as I've said before, the leap from non-crypto to BTC is much larger than the leap for BTC to ETH. And as I said, I thought an ETH ETF would follow shortly after a BTC one. This is just an application. This has not been approved. It's not live or anything like that. But in saying that, this is really bullish, right? And I was actually joking to some friends before. I'm like, hey, what if an ETH ETF was approved before a BTC ETF? I don't think that's going to happen, but it'd be hilarious if it did. Like the amount of God, they call it cope on Twitter, right? The amount of cope that we would be seeing from people would be, pretty funny, I guess, like to watch play out. But I don't think that's going to happen. I do think an ETH ETF is going to come like shortly after a BTC one, though. And the fact that there's already applications being done means that these companies want to obviously be first in line to have these ETH ETFs managed by them to obviously make money off of them. But yeah, that's really bullish. And then Frank Chaparo from The Block here put out a great tweet, basically showing what the flows from institutional investors kind of have been, or what the flows into like different Ethereum funds have been like for ETH since the start of this year, and what it's been like for BTC. Look at that, right? Doesn't it look much healthier on ETH, right? From January this year to January 2020 to May 2021, whereas BTC, it's like it was flat for a while and then spiked really high, and now it's just like cratered, right? So yeah, I don't know. It looks really healthy there with ETH there, but yeah, I guess enough on the price talk here. Just really, really great to see over 4K, over 0.07 on the ratio. Let's continue, right? I'm not going to start being euphoric and call for the flippening or whatever. I mean, I think the flippening is going to happen, but I'm not going to say it's going to happen next week or anything like that. It certainly looks like it wants to happen next week, but I promise not to tweet anything about it. And, if it does happen, I'll put a tweet out. But until then, I'm not going to start tweeting because I don't want to be like the reverse Udi and be like the guy who caused the ratio to go back down and basically drop 50% or something. I'm sick of being a top signal, but yeah, anyway, moving on from that. So I was looking over my old content actually over the weekend, and I found this piece that I had forgotten about that I wrote in January of 2019. So Jan 8th, 2019. The piece was called Why Ether is Valuable. Now, at the time that I wrote this piece, the ETH price was $150, and sentiment for Ethereum and ETH was the absolute worst it had ever been. Now, some people replied and said it was worse during the DAO. maybe among the people at the time it was worse, but in terms of like the sheer number of people in the ecosystem at the time in January of 2019, there were much more people than there were around the DAO hack. So I think it was worse there. But that's just an aside here. On top of this, ETH had dropped 94% from $14.20 to $80 in December, and then $150 was still like a 90% drop or something like that. So that, for me to write this piece, I guess, back then, basically saying, why ETH is valuable, a lot of people thought I was just stupid, and the only people who really cared about this was like Ethereum, like hardcore Ethereum people or whatever. But and as I said in my tweet, I'm most proud of this piece because it was so forward-looking. Like, I'm not going to toot my own horn here, but I was reading through it and I was like, holy crap. I actually picked a lot of what happened. Like, and it wasn't just me. As you can see down the bottom here, I actually had people reviewing it. All our favorites: DC Investor, Eric Connor, Chaz Schmidt, Ryan Sean Adams, and Cyrus Unisi. They all helped me with this piece at the time. I remember, like, we were going over it and everything, but essentially, like, we were right. I mean, what gives ETH a value? Here is the, breakdown. It's used to pay fees, right? And actually, I should note here that 1559 didn't actually come out until April. The EIP in April of 2019 didn't get published till then. So I wrote this piece even before 1559. So but still, there was still demand for ETH to use to pay transaction fees, right? It was used as collateral in DeFi, in Maker and Compound. DeFi was let me tell you this much. In January of 2019, DeFi was a joke to everyone except the hardcore believers. It was a niche within a niche within a niche. It was so small. There was like so little value locked in these things, and Maker was like 95% of DeFi at that point. But anyway, it was used as collateral then. And it was used, and it's continued to be used as collateral and only grown since then. And I said it can be lent or borrowed, right? Which it can still be lent or borrowed in a much bigger way now. It's accepted as payment at certain retailers and service providers. Yes, it is, and it's still accepted as payment. And it's used as money. So I've said here, used as a medium of exchange or money to purchase Ethereum-based tokens via ICOs or exchanges, right? DEXs, things like that. Crypto collectibles, right? Which is basically NFTs. Which includes in-game items and other kind of NFTs here. And, it's funny, I put this here earned as a reward for completing bounties on Gitcoin and Bounties Network. But, like, Gitcoin didn't have grants back then. The Gitcoin grants, I'm pretty sure, launched a bit later than January 2019 here. But it's still being used there, right? A lot of people donate ETH. And then I went on to say that, obviously, ETH is going to be staked in ETH2, which is obviously a huge driver for ETH here. And then, I was talking about, can tokens on Ethereum be used instead of Ether to kind of like pay for gas fees and things like that? I mean, post 1559, they won't be able to at all. They can now through flashbots and things like that. But still, I mean, most people pay their fees in ETH, right? And then I went on to explain, like, how does a valuable Ether help to secure the network? And then what the network secures, describe what money was and all this sort of stuff. What I did want to go over is like the supporting data at the time. So the average exchange volume, this is centralized exchange volume at the time, was 2 billion USD for ETH. Today it's like 60 billion, so 30x more, right? Over 1.18 million ETH was in MakerDAO, which was essentially, as I said, 95% of DeFi at the time. And now it's like 10 point something million. And 1.8 million ETH at the time in dollar value was like 40x. It's 40x more now in dollar value. And we have like, 10 times as much ETH, or not 10 times, sorry, but like, 5-6 times more ETH in there. So not only do we have more ETH, we have more dollar value ETH as well. And then I said, another 40,000 ETH is locked in other DeFi. So obviously, as I said, Maker accounted for most of it here. The Ethereum network is processing 600,000 transactions per day. It's processing like 1.5 right now, but there's a cap on how many transactions it can process, because 1.5 million, because of the block size or the gas limit as we know it in Ethereum. So, the gas limit has gone up since then, so we can process more transactions. But as I mentioned here, gas usage was at capacity even when the gas limit was like at 10 million, I think, back then, or maybe even less than that. There's 250,000 active addresses per day. I think it's like 800,000 today. And then I went on about ICOs as well here. But then, this, which hasn't changed, this is another very key bull case for Ethereum. The expected issuance rate of ETH in an ETH2 world. Look at this chart. This chart was made by ETHHub. It was made by Eric, and we posted it to ETHHub. And it basically listed the phases of ETH2, which aren't really known as phases now. But phase 2 was like no, I guess like at the time was referring to the merger. So the ETH1 to ETH2 merger, which I said here, in phase 2, the ETH1 chain will be deprecated and the network issuance rate will dramatically fall to the planned target of less than 1%. This is what people are talking about today, from 4.5% to less than 1%, to which is current, a lot of people are saying around 0.5% today. This was known 2.5 years ago, and now the market is pricing it in. See what I mean? Markets are not efficient. I've gone over this so many times. You had so much alpha all through 2019. ETH ended the year at like 130. You had all of 2019 to buy ETH, except the mid 2019 it went to like $300 and something. But most of 2019 you had ample opportunity to buy ETH between $100 and $300. And these things were known, right? If you had the conviction, you had the faith, you did very well. But anyway, I'm going to leave it at that because I'm tooting my own horn a little bit here. But I'm very, very proud. And I'm very proud that I was able to call so much of this and to kind of like see it all play out. For me, it's just seeing Ethereum win and wins by so much, and seeing kind of like the vision that myself and a lot of others had in the early days is playing out in such a big way, and the rest of the world is waking up to it. That is what I'm most proud of, and that is what I consider the bulk of my kind of like, most impactful work, I guess. Like, for me, the early days, they're never going to be repeated. I don't think, the genie's ever going to be put back in the bottle. I think Ethereum and DeFi are going to take over the entire world, right? But yeah, I think just like, outside of the monetary value, the kind of like, I guess, social value for myself of kind of like seeing this and being right just means a lot to me. And it means a lot to the other early Ethereans too. If you speak to any of them, they all feel the same way as I do. And I'm sure a lot of you feel the same way if you believed and followed on with the journey. I'm sure a lot of you listened to the ETH Hub podcast, which was going on at this time as well. We started that late 2018. So yeah, I'm sure a lot of you are listening to that through the bear market. And, I'm sure a lot of you were reading the ETH Hub newsletter and things like that as well. So yeah, I'll leave it at that for now. We'll move on. So I tweeted out this picture today, and I've written my newsletter today about this, but essentially I tweeted out and said, this is still my favorite chart in crypto. This chart basically shows the percentage of ETH in centralized exchanges versus the percentage of ETH in smart contracts, aka DeFi, right? So you can see here that the percentage of the ETH supply in smart contracts is currently 23%. On centralized exchanges, it is like 11.7% if I'm eyeing the chart right here. And you can see how much it's fallen since the DeFi summer started in like, I guess really kicked off in maybe like August of 2020. It went from 16 or 17% to 11.5. So a lot of it has flowed out, and a lot of it has flowed into smart contracts. Now, I explained this in my newsletter today, but I'll give a TLDR here. This means that ETH is going into a variety of things. It's going into DeFi. A lot of it's going into MakerDAO, Compound, Arvan liquidity to be used as collateral to do all manner of things. A lot of it's going into AMMs like Uniswap, SushiSwap, all that good stuff. A lot of it's going into staking, right? Because the ETH2 deposit contract is a smart contract, right? You have to send your ETH there to get it into ETH2 to stake. A lot of it is being sent into cold storage as well, because there's the Gnosis Safe smart contract wallet, which holds about 1.8 million ETH right now, which is a lot of ETH. And I think it's about $4 billion worth of ETH, probably more than that, if I'm doing my math correct. I think it's way more than that. I think it might be like $7 or $8 billion. So that's a lot of ETH in that smart contract wallet. But the reason why I kind of like wrote the newsletter is because to answer the question is like, is this bullish or bearish for ETH? And I think that's the wrong question. I think the right questions to ask is like, what is this ETH being used for when it's taken off exchanges? Not whether it's bullish or bearish, because you can't know that just by looking at this stat. You have to look at what it's being used for, because if it's just being put into, AMMs or something like that, then it's still kind of part of like the active trading supply. A lot of it isn't. A lot of it sits dormant, but still, like, it is part of the active kind of like trading supply, at least some of it. And then in a Uniswap V3 world, depending on what the LPs are doing, a lot of it could be part of the active trading supply. But anyway, that's one aspect to it. But a lot of it in DeFi is actually going into money markets and being used as collateral. There's 3.1 million in Maker. There's 1 million in Arvan and 1 million in Compound and 1.1 in Liquidity. So when you look at it like that, there's like a healthy chunk, I think 6.8 million, if I'm doing my math right, in just being used as collateral to back these things. And that ETH doesn't get moved until someone closes their position, right? Or unless someone borrows ETH from these money markets, which rarely happens. So there's that aspect to it. Then there's also the smart contract storage, which is usually cold storage. So it's not locked or frozen, but it just sits there, right? And you can see it coming in and out and all that sort of stuff. Then the biggest thing I think is the ETH moving into staking, because that is locked, right? That is locked in ETH2 in the beacon chain until the merger happens. And yes, you can get derivatives, but derivatives aren't actual ETH. It's a derivative, right? It's just it has its value tied to ETH, but it is not actual ETH. Now, I think that we've seen an uptick in staking, right? I think I put a tweet out here, actually. Yeah, we've seen an uptick in ETH going into ETH2 to stake since Coinbase announced that their staking has been rolling out. So there is actually new ETH being purchased to stake. This isn't just ETH that already existed and people had in cold storage going into staking or being taken out of DeFi to go into staking. This is ETH that's actually being purchased new from, on the market, on the free floating market by new investors and possibly institutions that want to stake. Because the staking API is still around 7% on a rapidly appreciating asset. And then post-merge, it's going to probably spike to 20-25% at current ETH staked rates. So we're going to see a very healthy chunk. I think 20 million plus ETH staked once the merger happens. And, sometime next year, I reckon we're going to see that. So that is where the bullishness comes from. Not from the question of, is this bullish or bearish, just looking at that raw number. You need to add nuance to it, just like everything, right? But yeah, I'll leave it at that. I think, obviously, it's been bullish because ETH is over 4K. I also think the narratives are very powerful too, right? Because you have the narrative of, hey, ETH is being locked up, right? ETH is being used in DeFi. ETH is a productive asset. ETH is utility. The more productive the Ethereum network is, the more fees are being burned in 1559, right? All that good stuff. So yeah, I think it's obviously been extremely bullish. So you can see here, Uri from Starkware put out a great tweet where he said there's been $1 billion of cumulative trading volume across their different mainnet employants on different decentralized exchanges. So 75% is due to StarkX's roll-up of DYDX. Obviously, DYDX has been growing really quickly, and I've been covering them lately. And 25% is part of StarkX's Validium solution, which is mostly Diversify and also Immutable X here. So that $1 billion came really quickly. Diversify has been live for quite a while, but Immutable X and DYDX are relatively new. And Immutable X services a different market because it's an NFT marketplace. DYDX is perps, and Diversify is a lot of it's like just a normal decentralized exchange, an order book exchange and things like that, and AMM and swap exchange too. They're doing a bunch of other stuff as well, which is cool. But yeah, as Uri says here, next stop 10 billion, of course, right? Then 100 billion, then a trillion. We're going to scale L2 just like we scale up L2 volumes, just like we scaled L1 volumes, which is really cool to see. So Ben Edinington put out his What's New in ETH2 update for the last 2 weeks. This is a nice and healthy update covering the beacon chain, staking, Rayonism, which is the ETH1 to ETH2 testnet that's been going on over the last month or so. Altair, which is the first ETH2 hard fork. The spec freeze is due around the 21st of May, which is coming up soon, which means that the client devs will be working to implement all of that stuff with the target of a late July, early August for deployment to the beacon chain. Some updates on the merge here, and some links here, and of course all the general media stuff and other stuff going on here, which is really, really cool. So again, this is the best newsletter to subscribe to if you want to keep up to date with what's happening in ETH2. Definitely go check it out. It'll be linked in the YouTube description below. So there was another DeFi exploit over the weekend. Unfortunately, this time it happened to Rari Capital. There was, I think, over $10 million stolen in this exploit, and it was the first cross-chain exploit. Now, Igor from The Block put together a really great thread explaining what this is here. I highly recommend going and checking out the thread. But essentially, I think the way this exploit worked, and as Igor describes here, they used a way to create a fake token and pool on PancakeSwap on BSC so that Alpaca Finance could be used to tap into this. And they did a bunch of fancy stuff here with different kind of like trades and things like that with the fake token. And in the end, they were able to profit, I guess, with 2 different attacks. With $11 million was stolen in the first attack, and another, I think, $11 million was stolen. Another 1.7k ETH was at risk before the actions taken by the Rari team, and the total profit for the attacker was $15 million in ETH. So, unfortunate, right? But we're used to this in DeFi at this point. I'm confident that Rari's Capital is going to find a way to make people whole, whether that's socializing the losses somehow or, creating a new token to kind of feed, I guess, like system revenue in to make up for this sort of stuff. It sucks, but this is DeFi. this is what happens in a lot of DeFi. One kind of like bug in your code and you can lose lots of money for people. But this is how we learn. It gets better over time. It used to be a lot worse. I think it's getting much better over time here. But yeah, I think Rari will come out on top here. So Superphiz put out a tweet the other day talking about ETH2 staking. He basically said, let's stop assuming that beacon chain validators want to run Linux. I'm a Linux maxi, but I know Windows users are waiting for us to stop being elitist and offer tools to make staking on Windows accessible. A good GUI or graphical user interface never killed anyone. Decentralized staking is multi-platform. I can't agree with this more. I know that people are like, oh, Linux is better for staking, just learn how to use Linux. We shouldn't expect people to do that. That is not fair for people. There's a lot of people who just want to stake on their own, right, and do it in the simplest way possible. And a lot of people run Windows. It's just a matter of fact. Like, just because Linux may be quote unquote better doesn't mean that people should be forced to run it, especially if they're doing it from their main PC. And also, if we want people to do to stake on their own, we need to make it as easy as possible for them. Stop being elitist about it. We need to make client diversity as easy as possible, as I've spoken about in the past. And as Superphiz notes kind of here with, making it easy for people to stake. And he says decentralized staking is multi-platform. It's not just Windows, it's Mac OS as well, and it's Linux. And I think servicing all those three is critically important. There's a lot of Mac users who would love to stake on their own, but definitely need more help doing that maybe. But I think Windows is obviously maybe a little bit of an outlier here because Mac OS, you have a terminal and things like that, so it's a bit easier. But with Windows, and as Superphiz notes here, you probably need a GUI, right? Because there's PowerShell on Windows, but it's not like as good as a terminal. But also, we shouldn't be expecting everyone to be able to use these command lines and PowerShells and terminals. Just getting a simple GUI, a simple user interface that can be opened in a web browser where people can monitor their staking and control their staking from Windows is what you need to do. Is very, very healthy. So I think, once that comes out, we may see a lot of more solo stakers. I hope to see that. But just like a PSA, I guess, to the community around, ETH2, but specifically the wider Ethereum community as a whole. So yeah, I guess thanks to Superphiz for kind of highlighting this here. So the Element Finance testnet is now live, and you can basically test everything on their testnet, which is really cool. It's I think every feature that they're going to have for their mainnet is essentially ready to be tested, and I think they detail it here. Basically, as they say, the testnet's live. It allows anyone to test their platform, all of it. You can find bugs in their UI or smart contracts, and then the aim is also to get feedback from the community here. So you can start earning a fixed yield on your assets through here. I mean, the interface looks pretty cool here. I'm not gonna connect my wallet or anything like that. I mean, it's a pretty good interface for I guess a beta or a testnet version. Or anything like that. I'm sure it's going to be cleaned up over time and made easier to use. But essentially, and it's on testnet, so it doesn't really matter. You can just basically get some testnet tokens, deposit things, deposit ETH and stuff like that into here. I'm not sure if this, okay, I was going to say, I'm not sure if this is going to load if my wallet's not connected. But essentially, yeah, you can basically pull into here, click through, click deposit maybe. Yep, there we go. And then it expands and you can kind of deposit things into here and all that stuff. But a quick recap for people who don't know what Element Finance is. It's basically a protocol that splits the principal from the yield. So let's say you put ETH into Yearn Vault and you get the YETH token that represents your position. So what Element Finance allows you to do is split that up into two tokens, one being the principal, which is the original ETH you put in, and one being a token that represents the yield. So say you're getting 10% on your ETH, that's going to be representing that 10% yield. And you can essentially sell that token into the market if you want to for a fixed yield, or you can sell the principal and just keep the yield token. I mean, I'm really bullish on this project. I really love it. It came out of nowhere, and I'm just really bullish on it because it's what I like to refer to as magic finance. I've kind of talked about that before. But yeah, if you want to go play around with this, definitely do so. As I said, it's only on testnet. You're not using any real money, which is really good because you can just ape away, right? Test anything you want. Try to break it. Try to hack it. Try to do anything. As the testnet, this is the whole point of a testnet. But there are gigabrains working at Element Finance, so if you find a bug or a kind of exploit where you can drain all the funds, I'm sure you'll be getting some props for that. So definitely go check the Element Finance testnet out here. So there was another exploit actually over the weekend. It got to do with Meebits, but this wasn't something that was stolen. It was basically someone coming up with a way to mint, I think, the rarest Meebit, or one of the rarest Meebits, by basically taking advantage of a bug in the minting contract here. So they basically minted it and basically just needed to use gas fees to mint it. Then they offered it for sale for 300 ETH on OpenSea, and then dropped it to 200 ETH a few minutes later. And then Pranksy NFT, or Pranksy here, a very popular NFT collector, buyed it immediately and didn't, without seemingly knowing it was from an exploit. I don't think he would have known it was from an exploit. But yeah, 200 ETH, right? From this guy who basically just found a bug in the contract, exploited it, got this rare Meebit, and now there's a story attached to it. I think that's what gives NFTs a lot of their value, right? Stories being attached to things. CryptoPunks have a great story. That's why they're still very valuable. Meebits don't have a story yet. They're new. Maybe this is the start of a really great story, and I'm sure Meebits are going to be used in different places. But yeah, really kind of interesting kind of bug here. I think 0x Niche here, he was actually tweeting out before he ran the exploit. Maybe it's in his recent tweets where he said, maybe it's not here. He said something about like, I'm about to earn X and X money, XX money. Yeah, I don't think I think he maybe deleted it. That's weird. He basically had a tweet where he said, I'm about to earn like 300 and something thousand an hour. And he was referring to the exploit that he was about to run. And then, you go back and see that, and it was funny. But he seems to have deleted it here. Anyway, he was the one who kind of exploited it and made a lot of money, like $1 million, I think $1 million, something like that. From this sort of thing here. So yeah, congrats to him on this for exploiting this. He's obviously someone who can read the code here. I could never do this, but it is what it is. So yeah, but I think that is it for today's episode. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.